Once we are in a bullish market, making sense of highs. Just know that the market is going to give us a reversal. This thing coming down is a reversal. Push up, an expansion, a reversal, an expansion, a reversal, an expansion. The expansion is for the buyers, the reversal is for the sellers. I will say something that the market consists of two people. There are two traders in the market. We have the buyers and the sellers. The market will create room for the buyers on a bullish trend. The market is on a bullish trend. We know that the market is going up. Yes, buyers are in control of the market. Yes. So now the market is creating room for what? For buyers, and also creating room for sellers. The rooms that are being created, the rooms that are being created for sellers are the what? Are the reversals, whereby we are on a bullish trend. Now it's also touches the bearish trend of the market, whereby the market is making series of lower high and lower low, lower high and lower low, lower high and lower low. Now we know that this guy lower low, lower high, lower low, lower high, lower low, lower low, lower high, lower low. And you can see that the market is still creating rooms for what? For buyers. The buying phase of this bearish trend is the buying phase is called the reversal. Why the continuation of the trend is the expansion of the market. Now let me explain this structural point again for you guys. The structural point. Now, in a case whereby I'm going to be touching this. Please pay close attention to this. Now let's explain the structural point and the internal liquidity, so that you don't get will I say lost? Sorry for that. Now the market is getting series of what? Lower low on the bearish trend, lower high, and now we say that you see the external liquidity has been taken out. Are you getting it? Now we see something doing like this. The market did something like this. I will need to use a candle. I will need to use a candlestick to explain this. Now remember, these are. Let me mark out this guy. Our internal liquidity, or what? Structural point. Now remember, we say something concerning the structural points and what the structural point and the internal liquidity. Now this is the lower high that serves two purposes, right? Now let's say the market now moves from this particular point to this point. Jesus, come on, okay, this is it. Please pay attention. I don't like rushing stuff. I don't like rushing. That's why I say I'm taking my time to make sure you are getting everything I'm saying. Now let's say now the market opens, the trade now moves to this particular point. Now I want to explain internal liquidity. I want to explain internal liquidity before structural point. Now I want to explain. We say that if the lower high was used as internal liquidity, price will give us an expansion to the what? To its original direction. Remember, we are on a downtrend. So if this lower high is standing as internal liquidity, we will be expecting a expansion to the what? To the downside. Now let's see now. The market, remember I told you something about candlestick. Now the market pushes, the buyers were able to push the market to this particular place. Remember the reversal part of it. Now you can see it starts reversing. You see, the rejects. Now let's say it closes like this. Remember, it always comes with wick as long as it has touched this particular point. Sorry, let me just draw it this way. You can see You see, you can see. This is what we call what? This is what we call an internal liquidity. The price will give us an expansion to the downside. Now we are going to be expecting something like this. After you see something like this, you see that the market closes below. It did not close above this internal liquidity. It did not close above this level, this particular level. You can see what I'm explaining. Now the market pushes to this side. Now remember, candle closure matters a lot. I have been shouting this. Candle closure matters a lot. Now, if the market, the price of the market pushes from this particular. Remember, I pushed from this side to this side. You can see it pushes to this side. Then it rejected, and it closes here. It closes here. Now we are going to be expecting an expansion to the downside. You see something like this. Remember to take out what? To take out what? The internal liquidity. To take out what? The internal liquidity. To take out the internal liquidity. If you definitely take it out, as long as it did not closes above. This is now the. So I don't know if you are getting what I'm explaining. I don't know if you are getting it. You can see. Trying to get it right. You can see. Now this is what? This is the internal liquidity part. Remember, the lower high has two purposes. It has two works. It has two characteristics. It's either it's serving as the internal liquidity or the structural points. Now let's explain the structural points, the structural phase of it. Let's explain the structural phase of it. Now, lower low, lower high. I think I should move it down a little bit. I think I should move it down a little bit. Okay, I'll take it to this. Okay, lower low, lower high. Now the external liquidity has been what? Taken out, which is the lower low. Now we now see something like price did something like this. I'm coming. I have to use the candlestick also. Let me first of all mark out the internal liquidity and the structural point. We don't know what is it yet. So remember we have explained the internal liquidity. Now I want to explain the structural point. I want to explain the structural point. First. Okay. Now let's do something. Now, after the market created a pay attention to the center point. After the market created a lower low, created the lower high. The lower low was taken, and once the lower low is being taken, it's called what? It's called our external liquidity. So our external liquidity has been taken out. So we have to we are paying attention to this particular point. Whether is it going to be working as a structural point or internal liquidity? Is it going to be a structural point or an internal liquidity? Now you see this particular one here. This particular lower. You see lower. One thing about lower high is that once it has been used as an internal liquidity, as an internal liquidity, with swept liquidity, we are going to be expecting what? Expansion to the downside. See, is that you will see something like this? Let me even try something else again. Liquidity sweep. This liquidity sweep, then expansion to the downside. Expansion to the downside. Sweep liquidity. Single candlestick formation. Is it a single candlestick formation or it is? Yes. Or internal liquidity. Now let's move back to this guy. So I was saying something. Now let's see. Now we have already gotten our first guy there, which is our internal liquidity that has been swept with the lower low, and the market start pushing upward and closes above. Let's say it pushes to this particular point, then it's rejected, sorry, and closes here. What is this guy called? It is called what? The what? The structural point. The structural point. The structural point. Now the candle closure. The candle closure matters a lot. Now the candlestick closes above and with a body. That means that the lower high will now be serving as a break of structure, which means it has changed its direction. Either it's a break of structure or it has changed it to a structural point. Thereby, we are going to be expecting a bias to the upside. It has changed its direction because remember it closes with a body. Remember this other one here, this first guy here, it closes with a wick. This one closes with a body. Anytime with something that is closing with a wick and it rejected downside, we'll be expecting an expansion to the downside, whereby the trade is on a downtrend. The same thing with also this guy. Now the market is on the downtrend, good and fine. Now after the market takes this external liquidity, now the market starts moving up, going to this lower high. Remember, we don't know what the lower high was. We're only waiting, we're only expecting that the market is either the market is giving us an internal liquidity or a structural point. Now, and we say something concerning a structural point. A structural point is when the market will actually move and closes with the wick. And closes with the wick. So it's clear, it's good and clear. I don't explain this thing like what you know I explain again. What do you guys want me to explain again? Now, the lower high closes after the market takes this external liquidity. The market moves up. You know, remember in a bearish trend, we'll be expecting a reversal. In a bearish trend, we're going to be expecting a reversal. So now the reversal of the market moves from this particular point. Remember, assuming the market is still on the downtrend, it could have closes with the wick, but now it's closes with the body. So we are going to call it a break of structure or a change of character. Now we'll be expecting something like this in the market. We're expecting something like this in the market, where the market moves to this particular, closes with the body. We're expecting a pullback to the downside, whether a short pullback or long pullback or deep pullback. Sorry, something like this. The market will start moving to. We're going to be changing direction to the upside. We're going to be changing direction to the upside. That's just it. So next, I'm going to be